So when I go into a TradFi conversation and I say we've been generating 15% yields over the last 12 months with a 7 Sharpe, they say, get the hell out of my office. And I say, okay, let's take a pause. You understand the funding arbitrage. You understand how basis trades work. They say, yeah, of course. And what we don't realize is crypto is still nascent. Crypto has not become fully market efficient yet.
Ben Nadareski is the founder of Solstice, and he's bringing Wall Street's favorite trading strategy to Solana and killing fake yield in the process.
A lot of these strategies that are out there in the market right now, you'll see these very high APYs, and you'll see these very untransparent just numbers just published on websites as if it doesn't matter. And that is the wrong side of development that we're seeing in DeFi right now. USX, our native stablecoin, saw no volatility, no depeg, and no issue going through the largest crypto liquidation event in history. The most exciting evolution in financial markets is not happening on Wall Street. It's happening on Solana.
Catch the full strategy on democratization of hedge fund profits and the rise of institutional DeFi with Drew Rogers and Ben Nadareski, only on Stable Dash.
All right, we're here for another session. We're here with Ben from Solstice, here live here at Solana Breakpoint 2025. It's been such an exciting conference. This is my second Breakpoint. Sounds like you guys have been building natively on Solana for a while. How many Breakpoints have you gone to at this point?
I think I've been to all of the breakpoints, but this
all
is
of them.
All of them, but this is by far the largest and easily the biggest Solana event in history. So we're incredibly proud to see the entire ecosystem show up.
That's incredible. The only time I was able to go downstairs and briefly see the main stage was actually when you were speaking. So I'm excited to dive into Solstice, what you're building. It seems like there's a lot of nuance and complexity to how it actually works and what it's the role that you're playing and the specific strategy for the stablecoin. So I'm really excited to get into this. Maybe we start with where this strategy became compelling for you. You've been in the space for many years. You gave me the very quick background. Maybe you can do the same for those who are listening, but I'm really personally curious on like when the positioning and strategy for the stablecoin became really clear in your mind and when that happened.
Absolutely. So at a high level, we saw a lot of institutional grade trading strategies become accessible to DeFi and retail. And when we started to see that trend internally at the Deus Capital portfolio, which is where Solstice was founded out of, we were trading a basis trade and delta neutral strategy at scale with about $250 million with our own book. Now that's a strategy that's fully delta neutral, low risk profile, high Sharpe, a great strategy for a wider spread of institutions to access. And then we said, wait a minute, there's an opportunity here to build a public permissionless protocol around this and give access to the full scope of retail and institutions at the same time. Like we say, whether if you have $5 or 50 million. And so what we did is we created a structure on Solana with a managed license fund vehicle that allows for all institutions to participate while offering a public permissionless protocol that accesses that same strategy. And how we do all that is through stablecoin and liquid staking token vehicles. So that structure in itself really came about a year and a half ago. And we started building that just about a year ago with a team that's now grown to just over 40 across 14 countries. And it's been a great uptake from the community.
You defined this as delta neutral. Can you define that term? I know people throw that around a lot. How do you define that? And then how does that specifically take shape in this public permissionless context?
Absolutely. So it all starts with the stablecoin narrative, which I think the major focus is. So accessing capital velocity and institutional grade strategies through a stablecoin is one of the most important parts. So we built a stablecoin native to Solana. It's technically a synthetic stablecoin backed by USDC, USDT, and other major liquid stables. So it allows for a diversified basket on the back end that diversifies the risk of any depeg scenarios or any liquidity events, which is what we saw, for example, on October 10th. USX, our native stablecoin, saw no volatility, no depeg, and no issue going through the largest crypto liquidation event in history. So that's the basis. Now, what we did is we took the trading strategies that were being conducted at our Deus Capital investment portfolio level. We brought the trading team over in the investment strategies and said, anybody that accesses our stable can one-click access by locking up their stable into our vault. That gives access to a delta neutral strategy. And so what we do is we take the collateral and we trade that using the largest liquid venues in the world, like CEXs like Binance, OKX, Bybit, etc. And we execute a delta neutral strategy that has 3 components. We do funding rate and basis arbitrage, which is the difference between spot and perps. And so we're effectively executing that trade on a constant basis across not just Bitcoin ETH pairs, but a longer tail assets as well. Anything that's very liquid, anything that's delta neutral. And effectively delta neutral meaning you're not taking a market position. So you're fully hedged out. It's market neutral. You care about the arbitrage spread around the bets of the future price of those assets versus the current spot price, as opposed to taking bets on just a directional risk. And so we do that trade at scale. We also do what we call hedge staking, which is effectively the same trade. We stake the underlying spot asset. So while you're doing that trade, you're also earning that stake yield. And then we also have an allocation to tokenized treasuries when funding rates are compressed. And the combination of that makes up a fully delta neutral strategy, which is why we're functioning with a Sharpe ratio around 7-8 right now. And it's been a strategy that's yielded about 15% over the last 12 months and 21% in 2024.
There's so much here. And these details matter so much. And I would be lying if I said that I followed all of that. Like I'm the stablecoin guy, and I'm still getting up to speed on how all of what you just said even kind of computes in my head. And I think in my view, that's the risk, and it's the opportunity, but that's also the risk of the space that you're building in, because these returns are extremely attractive. And when people see them, and when I see them, I get really pumped, because it's like these stable coins and where something like USX fits on the spectrum is so compelling. But the details of everything you just said are so crucial to those returns being lucrative, but also safe and reliable. How do you, I guess, thoughts on that, feel free, but I'm mainly like, how do you get that complexity to those like counterparties that you're dealing with and institutions that are allocating to you, like, comfortable with this stuff?
Absolutely. It's a really, really good point. So if you were to summarize what I just said, we do an institutional grade trading strategy, whatever that might be. Ours is delta neutral, many firms have others. Allowing access to that through a regulated structure is the important part. And that starts with the stablecoin narrative. Now, if you were to start to pull this apart and say, where do assets sit? Where are the transparency of the strategies? You start to see, and this is one of the reasons why we've been able to build trust with our ecosystem, is we have third-party attested returns. We have real-time proof of reserves that's with over-collateralization. Use some of the largest custody providers in the world, such as Copper and Cefu, to hold these assets with constant attestations from third parties. And these are constantly produced, constantly published, and constantly in the public's eye to pull apart. This should not be something that I say, we earn 15%, trust me. You should go in and do your own due diligence and see how we earn 15% directly. These are not token incentives, token emissions, subsidies. These are not those games that we're playing. These are strategies that are built to scale. And the reason why they're able to scale is because of these institutional rails and institutional structures underneath these strategies. And that's what we define as institutional DeFi, which is kind of, oxymoronic in a way. But at a very high level, the hedge fund world, the strategy of investment worlds needs to get democratized to the broader public to allow for them to access the same level of investment as institutional investors do without the high watermark. And that's what Solstice is doing.
And that's the tension that we're in, is like the hedge fund world understands all of this, and they get these terms and know this game. You know this game, and I think that is the opportunity, but the tension of the next 5 to 10 years that we'll live in, of this business that you're building, is like, how can we continue to clarify, distill complexity without losing the nuance of what makes these things really important? Because the special sauce of how you've done it in this way is also so key. You mentioned a couple of these terms like token emissions or these other things that it sounds like you look to these things and you see those specific approaches as misguided. Maybe define the alternative approaches that you don't think are as wise, and what that means, or what other projects or approaches you've intentionally avoided and why.
Sure. Let's keep it very simple. Is the yield sustainable, and is the yield scalable, right? A lot of these strategies that are out there in the market right now, you'll see these very high APYs, and you'll see these very untransparent just numbers just published on websites as if it doesn't matter. And that is the wrong side of development that we're seeing in DeFi right now. There's not a lot of them, but there are still in existence. And what you need to do is pull those apart and challenge them yourselves and say, where exactly is that number coming from? It's very simple due diligence and research. So with ours, when we look at delta neutral strategies on Solstice, this is a market neutral strategy that we say, here are how we're generating the returns, here are where the assets sit, and you're able to start pulling that apart from a very core level. These strategies, they're very widespread, but we start to see a lot of protocols that can only scale to 1 million or 2 with a looping strategy or incentives that are going to burn out in 6 months. And then as soon as the incentives dry up, there's no core utility in the protocol. And then you have constant hyper mobile capital that's just moving and being very mercenary of where the next yield pools are. You need to build strategies that can scale to billions if we want to evolve this industry to the next level. And so how do you do that? You take strategies that are known to scale to billions, like delta neutral arbitrage. That's a very naturally reoccurring market dynamic of the difference between spot and perps on any of these major core crypto assets in the market. That's a naturally reoccurring market dynamic that you don't take positional risk to extract yield from. That's a strategy that we've seen scale to billions with several players in the space already, and that's what Solstice is going after. So challenge the yield strategy, challenge where the yield is coming from, challenge where the assets are sitting. And as if you do that basic due diligence with a lot of protocols, it comes out very clearly whether or not this is a safe haven investment.
As you seek adoption for this, are you selling and partnering mainly with folks in this world who kind of get up to speed on these terms very quickly because they're traditionally in that same world? Or are you selling and democratizing this more into like maybe people who are in like who have been left out of these terms? Or are you actually selling and onboarding that the traditional incumbents who are really familiar, but they want access to getting off zero with stablecoins on chain?
Right now, we're selling to a combination, and the delta neutral strategies are kind of getting your feet wet in the water of institutional grade trading strategies. That's the big point. There's a lot more complex strategies out there that we're just entering into. So one of the major things is that we're looking at is once you dip your feet into the water and get delta neutral, then you can start to look at some of the more advanced strategies. And right now it's starting with people who know what's happening in the space. They know what delta neutral is. They're familiar with perps, familiar with basis, familiar with a lot of the different products that we utilize in order to generate this yield. And that's where we're starting. And now we're moving into this global retail shift where everybody should understand this naturally recurring market dynamic. If you want to generate yield in the market, you should understand some basic market dynamics of why does this arbitrage exist? Why is there a price mismatch in the market? And when we have a lot of educational material that we offer to all of our participants, and once you go past that education barrier, then you say, okay, I'm comfortable with why that yield exists and how is Solstice executing on that yield. And we have all the documentation, third-party proof of that. And that's the pathway to get institutional trust in DeFi and global retail trust. So right now, call it crypto educated individuals are mostly making up the pools of investors, but we're looking to scale that as wide as possible to the global retail market.
For our business, something that why we do this is because education is crucial to adoption. It's crucial to getting institutions comfortable and activated. It's there's a big gap, I think, in the next couple of years that this pool that we're playing in is like partnering with companies like yours to help accelerate understanding and accelerate movement so that they can actually partner with you to take that educational process and do that at scale for the industry. What's that process been like for you guys on your side? It sounds like that's been very top of mind. We were talking to Matt from Bitwise earlier, like they do that really well. Yeah. What does that practically look like for Solstice? Like, are you coming out with reports? Are you doing one-on-one calls? Practically, what does that mean?
It's a really, really good question. As we talked about, I've been in crypto since about 2013, and the hardest part has been the education journey. Yeah. I even spent 5 years guest lecturing at Wharton talking about cryptocurrencies to executive MBAs and MBA students, going through the journey with those type of students to bring them up to, here's the Bitcoin white paper, here is blockchain, here is how trust is established between two trustless counterparties online, here are the different versions of that across different L1s, and now these are the products that are emerging out of these L1s, and we're up to that education stage. And what Solstice has been focusing on is in-depth video review of walking people through these individual steps, educational content, including one-on-one sessions that we do with our community, and making sure that it's just very, very transparent around how the processes are made. We don't ask people to take a large intellectual leap of faith for this type of investment. It should start with understanding if you're familiar with the Solana ecosystem in general. Then we can say, okay, great. Here is why funding arbitrage exists. This is why there's a difference between spot and perp rates. This is why we're able to execute on this strategy. And then everyone says, okay, I understand the difference between how these yields are generated, why there's an arbitrage. So now how do you guys get it? And then we take them through the next journey of saying, this is how we execute on the sexes. This is where collateral sits. This is how it's mirrored onto the exchanges. We have full documentation along every single step of the journey. And if protocols don't do that now, you shouldn't expect to get global retail participation.
What's the most misunderstood part of that evolution, or the part that you find institutions or partners are getting stuck most often, or the thing that, at least right now, seems to be a barrier or a blocker or part of the stack that might be, either just extremely misunderstood or preventing more of this adoption?
We have two types of institutional investors. I'll approach it from three ways. We have two types of institutional investors and then retail investors. The two types of institutions are traditional investors who are coming in with fiat dollars, who are net new capital into crypto. We've set up such a structure that net new capital can actually enter in. So when I go into a TradFi conversation and I say we've been generating 15% yields over the last 12 months with a 7 Sharpe, they say, get the hell out of my office. And I say, okay, let's take a pause. You understand the funding arbitrage. You understand how basis trades work. They say, yeah, of course. And what we don't realize is crypto is still nascent. Crypto has not become fully market efficient yet. So these market efficiencies naturally exist in the cryptocurrency market comparatively to traditional markets. So then they say, look at where funding arbitrage was during these timeframes when there is lower volatility, lower market swings in TradFi. And then you can point to those moments and say, those types of market inefficiencies are what are existing now. And we are able to capitalize on that while they're inefficient. And that's where we're generating these yields. And so the TradFi investor, that's the biggest misconception there. The second is the crypto, I'll call it the crypto mercenary capital. So these are the guys that they know the game, they know the insides and outs. They look at us a lot and they think about token incentives because so many projects are incentivizing yield with short-term subsidies and short-term incentives.
Who are some of these usual, give us some example of these mercenaries in your mind? Maybe
I can
not
say,
or what kinds of businesses?
What I'll say is the crypto educated investor, like the very smart crypto educated investors that are actively deploying across multiple pools of capital. So those are the Galaxies, MEVs, Rockaway X's of the world that are very active in both DeFi and crypto investment participation. These people, they know deep insides and outs of the economics of these trades. And so one of the major, I say, misconceptions talking to them is a lot of protocols that they look at with investment. They're looking at similar investment structures that other protocols have offered with high investment subsidy through incentives. And what Solstice has tried to do is scale that back to almost a bare minimum and really focus on just core yield. Is that as sexy? No. But is it more sustainable? Yes. And we care about not having a cliff in 12 months where our incentives dry up and then we have no core utility. So that's the major piece there. And then for retail, it's about usability. So what we focus on is partnerships very heavily. In a strategy like ours, you need to go deep into the DeFi stack with the protocols themselves. So with Solana, we're partnering with Kamino, Loopscale, Exponent, and many others to go deep into the stack of Solana and say, you can take USX and the liquid staking token once you invest and do things with these actively across lending borrow markets, across PTYT systems, across payment systems, across DEX pools, whatever it might be. That's the DeFi value. That's where 2 + 2 = 5. And that's the piece that, for example, in the whole RWA narrative, one of the major reasons RWAs have been stuck and held up for so long is because, you can tokenize anything, but who cares? You bring that over and you need to do something with it on chain. You need to unlock the DeFi value on chain. So getting those RWAs and composable yield-bearing assets, utilizing them in different partnerships and markets. And so answering that utilization question for retail is probably the biggest misconception that we work around to say, no, we're not just this core yield. You can actually do several accretive value participations in the market with our tokens.
So practically today, if I personally on the retail side would be, we work with Mary and the Loopscale team, we're familiar with that business. Personally, I could go to Loopscale and then USX would be accessible through their platform or system, and I could get exposure, connect a wallet, create a wallet, get exposure to what you've built through something like that.
Exactly. So more specifically, what you can do in a lot of these platforms is you get USX, you lock it up for EUSX, so you're earning yield. EUSX is rising up in value as we generate yield. And then from that EUSX token, you're not just invested in a strategy. First off, it's 7-day liquid, so it's not like we're asking for quarterly lockups or something like that. You now have a composable yield-bearing asset that you can go bring onto multiple marketplaces like Loopscale, Kamino, Exponent, and generate more yield from that, collateralize against it, and put your capital to work. So it's max optimization of your capital. That's DeFi right there. It's not stopping at the investment structure. It's going as far as you can across these different marketplaces that have now evolved into hundreds of millions of dollars in marketplaces. Kamino, $4 billion marketplace, right? These are direct examples of putting this capital to work.
It's amazing. As we close here, software at Breakpoint. You've been to every one of them. This has been the biggest and best one, it sounds like, in your opinion. Speaking to Solana, as you guys have been natively building there, you were founded within that community, and it seems like really focused on that ecosystem. Why is that? What is the specific benefit to you as a builder, as an asset to be built and partnering with folks like Loopscale or Kamino? What does that look like, and why have you chosen to go so deep here?
Okay, so I'll answer it in two ways. Number one, and I always say this, culture is the catalyst for Solana. By far. I've worked in several other ecosystems in the L1, and the major difference that Solana says is not zero sum. It's a massive collaborative ecosystem. We don't have sharding of L2 communities with different liquidity pools fighting against each other constantly. There's not a natural internal competitive dynamic. There's a natural external competitive dynamic of Solana as a team versus the world, right? It's not Solana versus itself. That's a major difference that we see constantly. And the reason being is because there's full composability and interop across the Solana ecosystem. We've had tens of partners that have come out just from our launch on September 30th that have already fully integrated Solstice into their platform. And then they reach out, and then we do some marketing, and it's fantastic. And we didn't even go ahead with the integrations. That rarely happens in a lot of other L1 ecosystems. It's a massively collaborative community. And the second is something that I said on stage yesterday, is the most exciting evolution in financial markets is not happening on Wall Street. It's happening on Solana. And what I mean by that is the full stack of all these different asset classes, RWAs, DeFi stack unlocks, DEX pools, CeFi integrations. All of these are happening in parallel and pushing aggressively on Solana, almost like it's in sync. Every piece is working together in a very, very structured way. So you see this massive coordination effort in Solana. So we made the bet last year when we came out with Solstice. We could have built on any other protocol. Ethereum, for example, 120 billions of stablecoin volumes that we saw when we launched Solstice. While Solana was only at 2 billion. And now we're over 13, 14 billion roughly. And we expect that number to catch up to Ethereum in short time. And so we made that bet for a reason. And I'm very proud that we did.
It's incredible. Ben, thanks for the time.
Thank you for having me.
Super insightful. That was our conversation with Ben from Solstice. Thanks for listening.